It feels like the market is trying to build some momentum, but it's also hitting a few bumps along the way. There are several reasons for this hesitation. If you take a glance at the S&P 500 this morning, it's trending lower in the pre-market session. That drop reflects a broader sense of uncertainty. One major factor adding pressure is the news floating around about a possible Israeli strike on Iran's nuclear facilities. As you can imagine, headlines like that don't go unnoticed. They tend to shake investor confidence. Even though these kinds of reports surface fairly often, especially when coming from major outlets like CNN, they still cause markets to react with caution. When fear creeps in, it's natural for investors to hit the brakes. Some decide to pull their money out. Others wait on the sidelines, watching and wondering what might happen next. That's just how markets work. They're emotionally reactive, and this is why I always say expect the unexpected. There's always a chance that a black swan event, something totally unpredictable, could throw everything off course. It's exactly why I steer clear of telling anyone what to buy, sell, or hold. No one has a crystal ball. Markets shift on a dime, and nobody truly knows what tomorrow will bring. This isn't financial advice, just a reminder to do your own research before jumping into any investment. Whether it's stocks, crypto, real estate, or even personal development, every choice comes with risk. Yes, even betting on yourself. You might go to college, land a great job, and earn big. Or maybe things don't go as planned. That's the reality. Every investment in life, no matter how promising it sounds, carries some level of uncertainty. Looking at where we are today, it's honestly a mixed bag. The signals coming from the market are all over the place. On one hand, stock prices are climbing like the trade tensions between global powers have disappeared overnight. On the other, gold is rallying too, as if investors are bracing for those tensions to explode. Meanwhile, bond yields are rising, which usually signals that people believe the economy is strong and avoiding recession. But at the same time, oil prices are falling, often a sign that the market sees trouble ahead, maybe even a slowdown. So which is it? Truth is, it's hard to say. These contradictions reflect the confusion, and that's exactly why staying informed, flexible, and cautious matters more than ever. Oh, and in case you missed it, oil prices jumped after CNN dropped that headline. Meanwhile, the US dollar index is slipping like inflation has vanished, while Bitcoin is surging again, almost as if inflation is roaring back, and people are turning to it as a safe haven. This market never lets you catch your breath. Seriously, it's wild out here. Makes you wonder what's going on with the VIX. Well, today the VIX has crept up slightly, though it's still sitting below 20. Interesting, right? Especially considering that yesterday both the stock market and the VIX were in the red. And from what I've seen over time, when that rare combo shows up, markets and the VIX both down, it's often followed by a green day. But then you throw in a big geopolitical headline, like the Israel-Iran situation, and that puts fear back on the table. It's these unexpected twists that remind us why market awareness matters. Now, if you're tuning in daily or even catching up a few times a day, I genuinely appreciate you. What we try to do here is go beyond just crypto news. It's about looking at the bigger picture. Sure, a lot of what we discuss is centered on Bitcoin or XRP, but those markets don't move in a vacuum. Broader global events shape the mood, and that trickles into crypto prices too. Take XRP for example. It tends to follow Bitcoin's lead more often than not. When Bitcoin took a sharp dip, XRP mirrored the move pretty closely. Each digital asset has its own quirks. Sure, Bitcoin tends to have more leverage behind it, and that can lead to liquidations or big buy-sell walls getting hit, but overall there's a rhythm to how crypto behaves. These algorithmic patterns kick in, and you'll notice everything starts moving together. That synchronized movement. It's usually not random. It's the algos doing their thing, automated trading bots responding to key price zones, triggering cascades of buying or selling across the board. Once that wave passes and the pressure eases, each coin starts behaving a little differently again. Recognizing these patterns only comes with time and experience, looking at charts, understanding how markets react, and realizing that sometimes manipulation plays a role too. That's the nature of crypto. Fast, volatile, unpredictable, but the more you watch and learn, the better you get at riding the waves. Sometimes you just have to accept the market for what it is, unpredictable, but that's part of the ride. Interestingly, the odds of the US slipping into a recession in 2025 have dropped to just 38%. That's a big shift considering how high those numbers were not too long ago. Since late April, the probability of a recession has steadily declined, down a full 33 percentage points. Just think back, we were sitting at a scary 71% chance when markets were at their lowest, and everyone was shouting recession from the rooftops. But then the narrative shifted. Former President Trump softened his stance, especially regarding economic policy and trade, and that helped cool off some of the fear. Add to that the relatively positive chatter around US-China trade talks, and suddenly sentiment improved. That said, we haven't heard much about those negotiations lately. It's been a week or two of silence. What's happening behind the scenes? Is it just the final details they're ironing out, or did the talks stall? Treasury Secretary Bison hasn't made any recent statements, so it's all speculation for now, but any update could definitely shake up the markets again. If you've been watching crypto, you've probably noticed things have been pretty quiet lately. Ethereum, for example, has been hovering in place over the past week or two. Bitcoin did have a nice jump over the last few days, but has since cooled off. XRP followed a similar pattern. It had a strong upward move, but over the past 4 or 5 days, it settled down around the 2.33 level. The whole market seems to be in wait-and-see mode, which makes the next move even more intriguing. XRP in particular is still respecting its upward trend line. It's moving within a defined rising channel, and now all eyes are on whether it'll bounce from this level and head toward the 3.00 zone, or if we'll see it break down. If Bitcoin, for instance, reaches its all-time high or gets close and then sharply reverses, that could trigger a broader sell-off across the market. It's one of those moments where momentum could shift fast, and you want to be ready for either direction. On the bright side, there's been a massive influx of money into Bitcoin ETFs this week, and we're only a couple of days in. Just on Monday, inflows hit an eye-popping $666 million, followed by another $329 million on Tuesday. That's nearly $1 billion in just 48 hours. Monday's surge was especially notable. It kicked off the week with strong volume and renewed optimism, which helped fuel Bitcoin's recent move. Now we wait to see if that momentum keeps building, or if the market takes another breather. Tuesday was all over the place. Markets were swinging in both directions. Wait, hold up. It's already Wednesday. Time flies. Let's backtrack a bit. Sunday gave us a strong push upward, then came Monday, and you could feel the FOMO kicking in. Traders rushed in, but despite all the action, we closed the day a bit lower than where we started. On Tuesday we saw a slight bounce again, and today started strong too, before giving back some of those